Good morning, traders. Welcome back. Daily Market Analytics, Friday, last day of the trading week. It's time to revisit the crude oil that is doing pretty well. I think the technical picture right now suggests that we are on the upside, back on the upside, I should say. Price was basically starting to trade sideways over the last probably week or so, and it did that in a nice fashion because right before it also traded in a pretty tight and narrow range, and at some point around 8 or 9 of March, it basically kind of climbed up the stairs, and then again started trade sideways. But here's the interesting part here. You can see what I've marked down with this bluish line here. You can see that price, after breaking that top resistance 58.46, and just bear in mind that was a local resistance, that was not a major key level, but indeed it had a very nice reaction when it basically broke out and then started to test that key level from above. Take a look how many times it did so. All of them, of course, were failing to break back below that key level, actually bounced back up. And it seems to me that price just kind of confirmed that this level is a strong support, and there's a good chance it's going to hold. Now I want to take you back to the big picture, right? We've started to chase this upside trend ever since the beginning of February, so we're almost counting 2 months riding out that nice upside trend that did have a few technical corrections along the way. It was more of a sideways correction rather than a downside correction, but I think we are gearing up for the last stretch. Now, I specifically declared right from the get-go that my final destination is going to be right here, 61.98. I call it 62, and I want to respect that game plan and follow the guidelines that I've determined from the beginning. So I'm gonna basically pull out altogether at 62. Then I will sit on the sideline probably for a few days, and maybe I'll decide to reestablish a bullish position if we'll see that price can break through easily, and it's going to be confirmed by a higher time frame, in this case the weekly close. But for now, I'm definitely preparing myself for the last stretch here. We're getting closer to that 62. That's also where the 200-day moving average mysteriously encounters pretty much around that key level. I think price will make it. As you can see, I've adjusted the stop loss level quite significantly all the way to 56.60. We're still kind of hiding below 58.46, our main point of reference, and also below 57.14. So I think we got enough protection, so to speak, from any type of excess noise that's gonna come. Now, as long as price remains above 58.46, as I've suggested, it's much more likely that we'll see it continue hammering upwards. Alright guys, that's about that for the crude oil. Looking interesting. I'll definitely come back to follow up. See you in the next one.